So good morning, everyone. Welcome to yet another episode of Leverage. My name is Tomilola and I'll be your host for today. So today we have someone pretty interesting. She's a female founder, and we always try and pick those up, big female founders up, and give them time and space to hear that, make their voices heard. So today we have Tomilola Adejana, who is the CEO and founder of BANKLY. So welcome, Tomilola. How are you doing today?
I'm very well, thank you, Olumide.
It's great. It's great having you with us. So the first question I would ask is, uh, tell us about BANKLY. What does BANKLY do? What are the goals of BANKLY? And what does BANKLY seek to achieve in Nigeria?
Yeah, thank you. I like to say BANKLY is a hybrid financial institution. We're serving underserved communities or people who are, in a way, need access to more digital financial services. So right now, what we do is we serve three main segments. The first segment is SMEs or MSMEs. We provide them with payment tools, including POS machines or every form of them to be able to accept omni-channel payment, either cards, either transfers, either QR or cash itself. I think a second thing we do is we provide APIs to corporates in various verticals. So if you're trying to serve a bunch of people, but you are a formal institution yourself, then it's easy to just use either our virtual account API, our payout API, or even you have POS terminals and you want to deploy to certain segments, you can also use our API there. And finally is, of course, onboarding the Olumides and Alimats of this world, even before they become businesses or they start their own business. So that's what we do. And we've been doing that since actively since 2020. And yes, that's it.
Okay, thank you very much. So I think one thing that I would like to focus on is, like you said, onboarding the Olumides and Halimas of the world, of just trying to move people from being on their banks to being banked, of being or moving them from a tail of the spectrum of being unbanked to being banked. So in your experience, what has that been like for you as the founder of a fintech, of trying to move people from being unbanked to being underbanked to being banked?
Yeah, I think when you're trying to serve people, when you're trying to bring people into formal digital financial services, there are multiple challenges. I think the first one is there is lack of a form of there is a form of financial education, form of literacy that is necessary. So you have that gap. Either is bringing them on the internet, or you're just trying to teach them how to use these services that are not like paper cash, and how to use those devices. So there's a lot of education that needs to be done. The second thing is also security, in the sense that oftentimes, because of that lack of understanding of how digital financial services work, they tend to expose themselves financially. You would see, and you see it specifically in certain regions. It's also regional based, which is also the region specific, or the region concentration is also a function of education. So you will see people trying to onboard, maybe it's a small business who is trying to get our POS terminal. If you're going to get our POS terminal, the first thing that will happen is that you would be onboarded and be given an account or a wallet for the money you're accepting or you're paying out to. There's a store of value. Now, sometimes that store of value requires you to have some form of authentication, either it's OTP or either it's an email access. That means that something will be sent to you. Now, these people do not know how to protect themselves should I say, it's more like protect themselves digitally anywhere, meaning that they expose their emails, they give their accounts, they can provide their password randomly on any platform, which means that they lack the understanding that they are exposing themselves. And so when that happens, it breaks down the fundamental of trust, which is fundamental of financial services, which is trust. Because now, if you open an account and you're allowed, while you're opening the account, you are giving all your information to someone to do it for you, or you allowed someone create an email for you when there was even no need to, or you simply give your password to someone who's supposed to help you solve an issue. Oh, I have an issue, and then you do a video showing what the issue is, and in the video your password and your PIN was clearly seen, and you sent it on a WhatsApp group with 250 people. It's inevitable that there will be someone who would take advantage of your ignorance, and taking advantage of your ignorance then mean that if you know what, this doesn't work, I just got my money just got stolen. So that's majorly part of what we've seen. So security in many ways is also security around the fact that when they are unaware, but Bankly uses a hybrid form. So sometimes they're unaware of using things digitally, using technology, and they expose themselves like I described, or they are unaware even in how to engage with people. So when you even put like high touch, you put offline people, given that they're high touch, you put offline people to serve them, they still have to know how to protect themselves. So that's it. That's part of the challenges you experience.
Okay, great. So one thing that you mentioned was security and education. So in the last month or so, we've seen that there's been a shortage of cash in the country due to the Apex Bank's policy, that is the CBN's policy of redesigning the naira. And we've seen that a lot of banks have seen people queuing outside of their institutions to try to get cash, as well as some of them even experiencing troubles online just because of the pressure that has been on the NIP system. So what has been Bankly's experience so far of people trying to transfer money between each other? And then what are your own thoughts on what is going on currently?
Olumide, if I understand your question, you're asking what has been our experience, especially given this period, this cashless period over the last, shall I say, 60 days.
Yes, yes,
In
yes. What has Bankly as an organization? What has been your experience so far?
Yeah, definitely you've seen increased demand for the services we provide, either because our services to MSMEs or merchants is either you're in the business of money, which is agency banking, or you're in the business of other things, which is you might be selling food, you might be a trader, you might even be a filling station. All of you are merchants at the end of the day. First, we're seeing increased demand or transactions at the agency side in merchants in the business of money. And while that was not quite our expectation, because we anticipated or felt that the lack of cash would mean a reduced ability for them to serve their communities. So that was a bit surprising, but I also suspect just economically, when something becomes when something becomes exclusive, cash suddenly became a premium product. Cash suddenly became an exclusive product. There's the demand for it sometimes increases, and the increase in the demand is just economics, increases the price. I realized that agent, of course, were doing what they could to source for this exclusive product. And so the effort and the time and the cost is taking there means that is driving up the pricing. And increased pricing means that increased margins, and with increased margins come people were willing to do what it takes to participate in this. So it was just a whole was an old cycle. So it was observed. We saw that. Unfortunately, or fortunately, I guess you know that most of the processors or payment companies like us kept our pricing consistent. So nothing changed for us. Some of us even kept our pricing reduced. Nothing changed for us, but something did change for those merchants and whoever is their middleman to get cash. The second demand we observed is demand for the industry for at least a decade has been trying to digitize cash. One of the key things BANKLY has always done, because we believe money moves faster when it's digital, was to digitize cash. So from the Olumide to Alima, it's just to digitize cash, to say it's easier to pay someone. It's easier to pay, even if you're a business that has accepted payment in cash. It's easier to pay your supplier when you don't have to move cash in fiscal mode to go and drop it for them. But it's always been challenging because of habits and behavior. There was, whether it's without there were pros to cash, there were cons to cash, and just generally people do not like change except it's forced on them. And so there's been challenges digitizing transportation, there's been challenges digitizing farming, there's been challenges digitizing farmer markets. And I'm talking across many, many companies within the financial institution, to say, just be able to accept other forms of payment. And so you will see, even in central Lagos, which is, if you're looking for one of the most financially included spaces, you'll be talking of VI, Ikui, Lekki, and all of those places. But I would give money to my housekeeper. If I have to send my housekeeper to the market or to buy something, she would need cash. Even if I don't give her cash and I give her the money digitally, right here in Lekki or at Oniru Market, she would need to go to an ATM or to an agent network to withdraw cash, which was meaning that people were having to withdraw to remove money from its digital space to bring it out into non-digital spaces to pay people. And then the cycle continues with us trying to digitize these people. So you see many companies trying to digitize people within those markets, try to digitize people within those commercial transportation system. But the easiest way to digitize people is the source of funds, which means that if this bus driver has already collected Naira from everybody, I've already collected cash from everybody, telling him to come and put it inside a store of value is useless. But if he had already collected it digitally, but then getting him to collect it digitally became a barrier because he doesn't want to, because what's not broken is not fair. What's the why fix was not broken, which is okay. But then of course it leads to a lot of shadow economy, cost of printing cash, and all what's not. But that's not their problem. So what we saw is now the willingness to want to digitize, they're now more willing to say no, to accept other forms of payment and to get the help or to get the infrastructure required to accept other forms of payment. So we did observe increased demand. Now, we also observed the instability of the financial structure in some places to cope with that increased demand. I think that could have been prevented with more notice to financial institutions, with more notice to us. I think it's important to note that there is capacity or budget that's been deployed based on your usual company. Let's take an example of a traditional commercial bank. Pick anyone, the top three that you know, has always experienced a certain level of volumes over the past 5 years. It's more like you are single, you have no intention of getting married in the next 5 years. There's no reason to go and buy and live alone in a 10 room mansion. That would be a waste. In fact, you'd be accused for an institution to be wasting your shareholders' resources. Now, if you knew that, you were living in a one room, for instance, and you suddenly know that, hey, I'm getting married, and maybe your fiancé is already pregnant with twins, the way you would plan for, especially when you are able to move from one room to maybe a 3-bedroom, is different because you anticipated But it was quite oftentimes some of us see the circular, you guys could see, we see the circular all at the same time. So it's difficult to kind of anticipate and be prepared. Of course, we're also talking about the central switching system, which did their best, which I have to admit that they have very solid structure, which is usually what most banks and most of us financial institutions process through. But sometimes you need a failover, you need backups of backups, you need other institutions equipped and notified to prepare so that when there's slightly downtime, because technology will be technology, can wake up today and your car is in good condition and you get off of the road, and sometimes you start to pick up, just like the way the body sometimes will not give you notice when it's going to be down with malaria sometimes. So that fell through that that failover was not there. So yes, we experienced poor transfers, we experienced that, but I think it's just teething issues. Because at the end of the day, you would bring your wife and twins into that one room, even if it would take you quickly 3 weeks or 4 months to get a 3-bedroom flat.
Okay, great. So one thing you mentioned there was just people's general education of the system. So how do you think, as a player in the fintech industry, you can educate people to move to a more digital, to more digital currency and then be less resistant to change? Because I think when you live in a metropolitan city like Lagos, it is easy to forget how much people depend on cash for a living. And I think this scarcity of the new naira notes has actually shown us that a majority of people in the country actually depend on cash. So how do you think we can then get most of these people to be educated and show them that moving digitally, moving their assets, their financial assets digitally is probably the best way of life for them?
Sorry, Olumide, can you repeat the question consistently?
Okay, so I was just asking, so how exactly can you, people in players in the fintech space, how can you educate people to get them to be less resistant to change, and then for them to then get on board with digital movement of financial assets, so that they're now spending less cash and then moving to things like Naira and making transfers and making more use of the digital channels?
I think, okay, great question. I think that sometimes policy policies will have to first things, and whether correctly or incorrectly, whether people like it or not, sometimes the only way to bring about a change is policy driven. There was a time in Nigeria that people didn't care much about wearing seatbelts. There's no amount of campaign you would do, even if you're a private company, to say, please, safety is good for you, wear seatbelt, blah, blah, blah. They wouldn't. But until it became a thing where you are fined, or people, it became a thing, and then seatbelt became it became part of our culture. It wasn't always like that, and it doesn't matter how much a company would have made noise or do ads online or showed the danger or the death of something. If people would do what they would do. Take for instance, companies will say maybe smokers are liable to die young or this or that. People will do what they want to do. You could say, except you do. Let me give an example. Imagine the way Singapore said, "Hey, nobody can. You're not allowed to chew gum." Is how someone said you're not allowed to do something. So what I'm saying in essence is that yes, there's education to be done, but sometimes to get change at the level and the scale necessary will require some formal policy, which is what has already happened. So I think there's little that has already been covered by the CBN. I think the second thing is to keep the change. Now, to get it to start is one thing. To keep the change is now the job of the institutions themselves. Which means that if you say someone, start accepting digital payments. It will have, and enable you to accept credit. You will help this and that. Whatever it is that the value proposition you sold to them, you need to keep your word. And so the thing that is left, the work we have to do is to ensure that people stay by providing a stable infrastructure for those services. It's obviously challenging in the first 30 days, but the stability is being observed now. And so we just need to build on that trust, or build or fix or mend fences where the trust has been broken. And I think that's what we need to do to get people to change. So first, like I said, the policy that has helped to foster change. Second is to maintain the change, which is our job as financial institutions. And that's what we need to do.
Okay, great. I believe those are two of the things that I do agree with. So now we'll be moving on to your experience as a female founder in the ecosystem. So whether it's you're reading the Brighter Bridges report, or the Disrupt Africa report on funding in 2022, we all know that being a female founder is definitely not easy. In 2021, female founders accounted for about 6.5% of all the funding of the continent. Last year, it was down to about 4.8. And there was another statistic of about 21% of companies with at least one female founder were able to receive funding. So what has been your experience as a female founder in the tech ecosystem? Because along the sectors, female founders in tech, most of the founders are, because I'm fintech, females are the ones that also receive the most funding. So what has your experience been as a female founder in fintech so far, especially when it comes to fundraising?
That question is a little narrow, and probably well spoken about, but experience with fundraising is it's what it is. The numbers tell the story, is even much better than I can speak about it in silo. There's a lot more that is necessary that a female founder obviously have to do to convince investors. I think it translates beyond just fundraising. There's a lot more a female founder has to do to get the right team, to get the team to even respect them. And the right team and that right respect sometimes translate into growth, because you can't grow the company by yourself. And that growth translates into sometimes the capacity that you need to prove to investors that you're a worthy investment. And all of that become a challenge that wraps up itself into fundraising. Commercially as well, there's a lot that that female founders suffer. I recently found that something like a joke, like I tease and say, I'm not teasing actually. It's a direct experience. I realized not so very recently. And what I'm saying is, if I'm trying to get a partner on board, for instance, or there's a business I'm trying to serve, I might know the founder, I might know the main decision maker, we might even have a social relationship, and it takes me a longer time to close them, because at the end of the day, sometimes businesses relationship based. You might have a service, but business sometimes is just based on relationship. It might take me a longer time to close this person versus a male executive of mine, if he's senior enough, or a male executive of another company, because sitting down with this person sometimes is like, how are you? And they mean well. And I'm not in any way saying that this is deliberate. They care about you. They are looking out for you. They are like, how? Because subconsciously, they are wondering if you need to consistently prove that you're a business, or you need to get to you need to get to certain numbers, right? That you before you're taken seriously. However, you need some. It's a chicken and egg issue. It's a cat 22, right? You need those partnerships to get where you need to be respected, but you need it's a cat 22 situation. But in male founders, sometimes I find that men sometimes bond on business deals. How far now? How's it going? What's happening at yours? This is what we are doing. Let's see how we. A 5 minute conversation. They don't have more to check in. You're not going to ask them, how are you doing? How was doing things? Are you sure you're okay? Or in a very interesting manner because you really care about this person, like as if she's your sister or your child. But if it's a guy, sometimes they've already 5 minutes, they've said, you know what, okay, my people will send emails, let's do that together. And that's it. Conversation done. And they've moved on in doing business together because they're bonding, they bond with making money together. So, and those are the challenges you face commercially. And those challenges translate to growth and sometimes translate to fundraising. So, like I said, if there's a lot to talk about around it, if we're going to talk fundraising alone, yes, the numbers speak for itself. I'm not going to go into or say there's anything peculiar around the way investors treat us. Yeah, I mean, every article is well covered. Yeah.
Yes, I do agree with you that male founders, I'm of the sentiment that majority of business deals are done over the dinner table or over drinks, as opposed to over a meeting table where people are hassling or they are trying to negotiate or they're trying to undercut each other. I believe most business deals are probably done over dinner or drinks, and they probably don't even take that long, and the conversations are not that serious. But what do you think we as an ecosystem can begin to change how female founders are looked at? Because some of the things you will hear is that female founders are not cutthroat enough, or some of them will say they are too bossy. It's always that they're always on two ends of on two ends of the extreme, and there's never a middle ground where people actually try and have nuance regarding this conversation. It's either the female founder is too bossy and she's not a personable person, or that she's too nice and she's not cutthroat enough. How do you think we as an ecosystem can begin to combat these narratives and begin to change people's ideologies for be able to see female founders as just people that are also in the ecosystem that are doing the work?
To be honest, that's a great question, and I'm not sure I have an answer. Because you have triggered something that is extremely true. It's a respect issue, and I don't think it's an ecosystem-based issue. It's just respect for someone accepting that they are your peer, and this decades-long issue. I'm not the type I don't consider myself someone who campaigns. I mean, my gender absolutely comes in when a conversation is being done, but I don't put gender at the beginning of stuff, and I don't see it as I don't carry. I know women need to be empowered. I need equity is important, but I don't lead with those. There are people who that's their specific purview who are feminist activists. I think my fight for feminism is quite different. It's just in showing the work. However, I have to admit, now I say all that to say that I am not the typical who would come and immediately say, oh, we are being disadvantaged, we are being this, we are being that. No, I think women have specific skill sets and strengths that men don't have. And I think that women should channel that. However, it's important to say and note that the spectrum of that accusation you mentioned is spot on, and it's almost 100%. It's very few that would say they don't experience it or they won't experience it. Or sometimes, if you're not looking in that direction, it's become a light bulb that comes up in your head. Sadly, albeit very sad, like you become extremely sad when you realize, you know what, this thing that they all say is true. I didn't want to believe it. But this thing that a lot of women say is sadly true. And the first thing is that it is a system and environment that has built up people. 1 minute, I need to confirm. I know that you scheduled 30 minutes. Oh gosh. Okay. I needed to confirm that I didn't have I do have what I think is internal. I'll join them later. Becomes there's an egotistic way to which we judge women. And that is a man will come and probably walk in and make demands or be upset over something, and everybody will scurry around because, oh, he's upset. Oh, my boss doesn't like this. A woman will do exactly the same, and they will say, what is she feeling like? Oh, it was interesting because more recently something happened, and I reached out to my advisory board to say, you know what, senior executives did this, and I want to make sure that they know that it's not just Tomi, that there's a board we answer to. So I would like you to engage with them. Someone I would never believe, a man would admit to that, I had to call me and say, Tomi, I think that this is how you should go about it, but it will be difficult for us to step in because you risk being called the B word. You are female. He said it. It was funny to hear it from him. But I had to pause. I couldn't do anything. I just let it go. What I mean, let it go. Something that could have had punitive, maybe that could have had consequences if it was a male founder. I had to let it go at the risk of being accused of being a mean B word. Now, on the flip side is when you would be the times when you don't take those decisions, you risk being accused of being weak. So you're always having to walk on this very thin rope that takes up a part of your work that a man doesn't have to worry about. You're worried about the result. You're worried about performance. You're worried about, but in all of that worrying, channeling it, you sometimes have to also walk a thin rope. As taking up a share of mind that would have been valuable channeled elsewhere. So yes, you really have to do a lot not to be called that you're harsh, you're mean, or you're whatever. And then you also risk in that being careful not to be perceived as weak, or not to even stand up for yourself when you're being walked over, even by your internal team, without your external team. So yeah, but the question, I don't know. I really don't know. I don't have an answer for why people perceive that. I guess you're asking someone who is facing that to find a solution. All I know is a female founder needs to understand that there are certain things, the higher you go, sometimes it's not visible to you until maybe your business becomes bigger and you need to hire more senior men or more senior, even women sometimes. And then you're perceived, there's ageism, there's gender issues. And so you just have to understand that it's what it is, and you consistently equip yourself to walk that thin rope and kill it while doing it, like work it so well that nobody can fault it. Does it put a lot more demand on you? Yes. But it's just what life is. I don't know what to do about it. I don't have the answers to everything, unfortunately.
I do agree with your sentiment of not having the answer. I just wanted to ask just to see what your mind was, because for me, I think
it's a fair question. Don't mind me. It's a fair question. But I just had to tell you that as fair a question it is, I think it's a great question. I just don't have it's not a simple answer.
It's not a simple answer.
Yeah. Let me say, you can only tackle, let's say Olumide realizes that, oh, I have malaria. So I'm going to use malaria drug. But if you don't realize that there's a diagnosis, someone can't come and force you and say, okay, so I can't come to you and say, Olumide, you have cancer. You need chemotherapy. You have to admit that you have cancer. And that you need, sorry, Olumide, you don't have cancer. You have to admit that you have cancer and be willing to get chemotherapy. So it becomes challenging for me to actually first diagnose, then provide a solution, because it's not that simple. It's more around people who have to first admit. And so I don't have an answer to it, because it's more, I can't say and say, hey, you have cancer, you must subject yourself to chemotherapy, else you think I'm mad.
And that is actually precisely where I was going, that before we even start proffering solution, we even need to admit that there is a problem in the first place. And before we can even admit there's a problem, that means certain people have to admit to themselves that they are part of the issue, and that will cause a lot of deep self-reflection that a lot of people frankly aren't comfortable with, because it will make them face a lot of uncomfortable truths about their character or things that they've done in the past, or how they might have disadvantaged somebody. So I think I do agree that it's definitely not an answer. It's not a question with a straightforward answer. And the first step is even to admitting that there is a problem that even needs to be solved in the first place. So I do agree with you wholeheartedly on that. And so as we wrap up this interview, I my last question would be, what exactly do you see? Where do you see Bankley in the next 5 to 10 years? What exactly are your goals for Bankley, and where do you see Bankley being as a fintech player in the market?
Yeah, thanks, Olumide. I think that my goal is that within the next 5 years, BANKLY is one of the top 5 financial institutions in Nigeria, irrespective. I'm not, when I say financial institution, whether it's a fintech, whether it's a bank, whatever it is as a financial institution, yeah, BANKLY is in the top 5. Yeah. And that's it.
Okay. So thank you very much, Tomilola, for providing great insights, particularly into the issue that women founders face, and speaking to the current issue of the cash of what of the implications of the cash crunch on the everyday Nigerians, as well as people that are not banked. Thank you very much. This has been a very lovely conversation to have with you. So thank you very much, Tomilola.
Thank you. Have a good morning.
You too.